Welcome to ASCII Geek.
Hey, if we haven't met already, I'm the digital avatar of ASCII Geek,
where we build your next advantage with tomorrow's technology. And today, one of our experts is stepping in to show our latest breakthrough. Enjoy and happy learning.
All right. Social media is flooded with AI trading bots claiming massive, almost vertical returns. But behind those flawless track records is often a mathematical deception. Take the developer Gray Matter AI. He wanted to test Claude's coding abilities, so he handed a $200,000 prop firm account over to a fully autonomous trading bot. During its testing phase, the system seemed invincible. It logged an 81% win rate over 1,500 trades, building absolute confidence in its underlying logic. But when that same bot went live, it collapsed. Within days, it wiped out $11,500, completely destroying the funded account. This diagram illustrates exactly what went wrong in the code. The bot was simulating backtests on the wrong candlestick bar, meaning a buy signal generated at $5,000 was actually being tested against future price data at $5,100. Because the simulation was secretly peeking at the future, it generated a flood of instant, guaranteed wins. But when forced to trade in the live market without that future knowledge, the logic imploded. Trusting raw AI outputs without rigorously validating the underlying data is a direct path to financial ruin. An AI model cannot intuitively distinguish between a historical simulation and live execution unless you explicitly code the guardrails. This problem extends far beyond a single coding error. The quantitative researcher AlgoVibes recently spent his evenings digging into a broader epidemic of viral AI bots faking their mathematical edge. He attempted to reconstruct a viral trading strategy built with Claude that loudly boasted a staggering 233% return over a period where the actual asset only grew 34%. After failing to replicate the numbers, he looked closer at the creator's own video and found his answer buried deep in the user interface. Two tiny words reading grid optimized. Grid optimization is a brute force parameter search. The creator ran hundreds of different settings, indicator thresholds, and cooldown periods through historical market data until they found the exact combination that produced the highest possible profit. It is the mathematical equivalent of giving a student the answer key the night before an exam. They will score a perfect 100%, but they haven't actually learned how to do the math. The AI in these viral videos didn't design a robust hedge fund algorithm. It simply wrote a script to test thousands of variations and plot the most visually impressive chart. Because the system already knew the answers before the test began, those grid-optimized returns are a synthetic illusion that guarantees future failure. To fix this, you have to stop letting the bot cheat. The developers at AI Pathways built a backtesting engine that enforces strict mathematical discipline. Traditional backtests fail by ingesting years of historical data all at once, allowing the model to simply memorize the past rather than adapt to it. This illustrates walk-forward analysis, training the AI in sequential chunks. First, the bot finds optimal parameters within a rolling 12-month window. Those settings lock. It then trades blind on the next 3 months of unseen data. Then, the engine shifts forward and repeats. True algorithmic resilience is proven only when a system survives blind data. This rigid structure separates a real mathematical edge from a curve-fit mirage. This graph compares the exact same strategy run through both methods. While a traditional curve-fit backtest spits out a fake 1,500% gain, the walk-forward analysis reveals the realistic truth, a modest 7% return. A properly built testing engine tells you if a strategy will actually survive the real world, rather than just plotting a beautiful upward line for social media. You can stop falling for impossible AI trading claims and start building the exact same institutional-grade guardrails that professional quants use. Click the link in the description to download the exact Claude Code prompt you need to run your own walk-forward analysis today.
All right, that's the update from the lab for today. I hope you learned something new. Head over to ASCIIgeek.com